financial markets, cryptocurrency, gold and silver, world news.
Fair to say you simply flooded the system with money.
Yes, we did. That's another way to think about it. We did.
Where does it come from? Do you just print it?
We print it digitally, and we do that by buying treasury bills. That actually increases the money supply.
Financial turmoil explained.
Good morning, ladies and gentlemen, and welcome to the show on this Thursday, the 19th of May, 2022. Thank you for tuning in. I'm glad to have you guys here. Now, here's the thing I want to talk about. When is the big change going to come in monetary policy and things going to start to shift back to normal again? We're going to talk about that, and we're going to talk about is a housing crisis, housing crash starting? Are we on the front edge of that? Let's get started. Let's open up the charts right here. Take a look at what's going on. You know that monkeypox virus I was talking about? There yesterday on yesterday's show that I was keeping an eye on. Well, it's in Massachusetts now, and it's also in Spain and in Portugal. It seems like I'm going to say it's almost traveling like it's a sexually transmitted disease, even though I know it's not really. But that's how it's kind of traveling. It says transmission can occur through contact with bodily fluids, okay, or through respiratory droplets following prolonged face-to-face contact. And so it's something that it's on my radar. I'm keeping my eye on it, but it doesn't sound like it's transmitted real easily. But then again, you know, a virus called AIDS, you know, going back a few years, maybe 10, 15, well, longer than that, 30 years ago or whatever. Even though it wasn't transmitted easily, still it made its way through the population. So viruses, you know, I mean, this virus makes people terribly ill and covers their whole body with bumps. Anyway, it's a pox, and it's very similar. It's in the pox family. Like, you ever heard of smallpox? So anyway, it's not. From what I understand, it's not as virulent as smallpox, but still, it's a pox, monkeypox. And we're going to take a look here, and we're going to take a look at this article about the housing crash. It says here that the United States housing market is starting to crack, and demand is slowing. Investors are pulling back. There's a ripple effect of rising rates starting to hit the market. And also what we have is there's been an awful lot of buying done by these big corporations like BlackRock and stuff like that. They could start selling median homes back into the market again. And it wouldn't take a small dump of these homes into the market to strongly adversely affect the price of the median home out there, you know, because once the market stalls and you get no buyers coming in, and then if you get more houses coming in on the market, that's a recipe for the price to drop, you know, and so the real estate market's suffering right now. But there's another thing I want to point out to you guys right here about the silver and gold price. Now, I've been watching for this, and I told you about this for quite a while. Something I call a fear trade, where what happens is as the markets and everything starts to turn downwards, people look for a place to put their money that's going to be safe. And when they see the conditions to the point where it creates fear amongst investors, I mean a lot of fear, what happens is they tend to run toward safe haven assets. Now, the two premier safe haven assets out there right now are gold and bonds, treasuries. And we've been seeing the price on treasuries pop. The price has been going up on them. That's when yields fall. We've been seeing that happen, and we're starting to see the fear trade translate itself toward gold and silver. So silver's up 50 cents today at 21.88. Let's take a look at gold real quick here. And gold is up $27.40, which is quite a large move for gold to the upside to 1844. This is the fear trade I told you guys about, and I said that when I was talking a number of months back, I don't know, maybe 6 months, maybe a year ago even, about this fear trade, I was saying that when the going really gets tough, they run to gold for a safe haven asset, and that at a certain point, when the stock markets start to turn down, will gold and silver necessarily turn downwards with the stock market completely? And what I said is, yeah, at first they will. They'll go down with the stock market. But then, at a certain point, I said, fear trade will come in. And we might be witnessing the front edge of this fear trade, where they buy in the gold and silver as a safe haven asset. We might be witnessing the front edge of that right now, along with buying into U.S. treasuries and bonds. Because, with treasuries and bonds, you got to know that the United States government's never going to default on those. Those are as good as the faith in the United States government. But the problem with them is the dollars they are based in could become worth less and less and less. That's something to take into consideration. But anyway, we're seeing a move up in the price of gold today. Now, cryptocurrency isn't faring any better than it has been in the last little bit. But I'm going to tell you guys what. Now, listen very carefully. At the start of a fear trade like this, in the gold and silver, going to see gold and silver pop. You might see gold and silver pop, and as the markets get worse and worse and the fear gets greater and greater, you'll see them rush into treasuries, and gold and silver will continue. This is a trend that could actually continue, and they might not touch cryptocurrencies until the Fed changes direction. So you're asking now, when's the Fed going to change direction? And I'm going to give you my best take on it. We're going to take a look at the Dow Jones right now, and we're going to take a look, and this is how I'm going to show you guys where I think the Fed will probably change direction. We saw that big fall off in the markets during the beginning of the COVID pandemic, and they fell from 29,000 all the way down to 19,173, which is a 10,000 point drop. Well, what we're seeing right now is another drop, and it's starting to become significant. Let's see, what are the markets down today right now at this point? 314 points to the downside. And we're seeing this drop here is becoming significant. Now, it's only went down about half as far as it went down at the beginning of the COVID pandemic. But then they brought out those big stimulus packages right at the bottom here, which sent the market careening back up again. This whole thing is a rinse, wash, repeat cycle. That's what this is. And I'm going to tell you guys, the Fed is bluffing. They're holding a nothing hand. Like if this was poker, the Fed would be holding a nothing hand, and they're keeping a straight face. And the straight face they're keeping is when they're telling everybody out there that, whoa, we're going to fight inflation. We're going to fight it tooth and nail. We're never going to relent. And a little bit of pain in the markets is okay, and all this kind of stuff. It's all BS. They're mouthing. They're using their mouth to try to stem off inflation rather than their actions. They're way behind the curve right now as far as raising interest rates to fight inflation. The inflation right now is half again more powerful than the 1970s inflation, and Paul Volcker had to raise interest rates to 15% or higher in order to stem that off. Interest rates are at historic lows right now. They've only raised 75 basis points. Not even 1 point. They haven't even raised interest rates 1 point yet. It's all jawboning. But what's it doing? It's making the markets careen downwards. Well, what do you think's going to happen when they seriously start to raise rates in June and July? Do you think this market's going to go up? They're going to get called. The Fed's going to get called. It's going to call their bluff. The market's going to call their bluff. But where do I think it's going to call their bluff? Well, I think that this market rout that's happening right now is a little bit overcooked at this point. You're saying, well, Glenn, if it's overcooked, that means maybe we should buy in right now. It's going to go back up. Yeah, it might go back up a little bit. Because they're overcooking it a little bit compared to being as the Fed has only raised 75 basis points. The market's overcooking this thing a little bit at this point. So we might see a little bounce. Okay? But should you buy in? I don't think so. I think that right now is not a time to buy in. I think the real time to buy in is after they've been called. The Fed's been called. They're going to get, their bluff is going to be called. And I think that it's going to get called when the market starts to drop down and starts to look like this one here at the start of the COVID pandemic with that much power behind it. You see, a 10,000 point drop. And we haven't seen a 10,000 point drop. We've seen what? I guess 4,000 or 5,000 or something like that. What's the peak here? Peak's 36, and right now the peak is 31. So 32, 3, 5,000. So we're only about halfway right now of where the market needs to be to call the Fed's bluff. Now, I can't get any straighter than that. That's what I'm picturing this thing at. So we got about double this downward. So we're going to probably be around 26,000 or somewhere, or maybe 25,000 in here. And the market's going to be dropping. And the Fed's going to say, hey, you know what? Our bluff's just been called. And they're going to come in with some sort of rescue packages for the markets and everything else out there. Because they're going to be in a depression by that time. And all they're going to succeed in doing is, with their big thing to fight inflation, all they'll have succeeded in doing is destroying the financial economy. And then they'll have to go back to stimulus again. And that's going to be when crypto is going to come back in a big way. And it's going to be at its lowest price along in there. You know, I mean, we could be talking about a Bitcoin price that's extremely low at that point in time. And that's when Bitcoin's going to pop. Along with gold and silver is going to really take off. But you ain't going to be able to get any gold and silver when that happens. It's all going to disappear. It's all going to be gone. You're not going to be able to buy any. And so, because you're not able to buy gold and silver, and that's when the investors are really going to be terrified, because it's going to be obvious to them at that point that the Fed can never control inflation, and inflation's going to run away. And in fact, it's going to start to run away. Completely run out of control at that point. And so there's going to be a mass panic. And this is what I've been talking about for years, is this mass panic out of fiat currencies around the world and into something that's going to retain its value. And that's cryptos, gold, and silver. And that's always going to be the only place to run. And so what happens when all of that investment money pours into the only place to run? Well, a change of fortunes happens. And so there's going to be buying opportunities. And, you know, the markets here, at that down point, they're going to be the same thing. You're going to see upwards that's going to be higher than it was before it started. So you're looking at a 36,200 and something, right? And you're looking at a drop probably down to 25,000. But then that surge is probably going to take us up over 40,000. Maybe 50,000 in the Dow. When the surge comes back in. You know, who knows, 100,000 Dow. But it's still going to be priced in dollars. It's still going to be, you're still going to make out better if you're into alternatives to the fiat currencies, which are going to retain their purchasing power. This is a hyperinflation we're headed toward, guys. And I know it's taken a long time to get here with a lot of twists and turns, but there's nowhere else for it to go. You just can't print unlimited amounts of money forever and expect that money to retain its value. It doesn't work that way. And this is ultimately where they're going. They're faced with either letting the entire world crash or keeping on going with this thing. And they're going to keep on going with it. And that means hyperinflation ultimately. And we're getting closer and closer to the day when that's here and it arrives. Take a look at crude oil today, down $1.48 at 108.11. Move index. This is when the Fed's going to fold. When this move index gets too high and the credit markets start to freeze up. The Fed's going to fold real fast. They'll fold their hand when that happens. Bonds and rates today, we can see them coming into the bonds. I mean, it's not super big. It's 5 basis points on the 10-year. 10-year at 2.82. The 30-year at 3.03. It's not huge. It's not a huge rush into bonds, but they're looking for safe havens right now. They're scared. They know that this thing is very serious, investors now at this point. And this is the first real fear trade I've seen since I've opened my channel. This is the first signal of a fear trade, is what I'm seeing today. It's just beginning, but I've been talking about it for a long time, this fear trade, where investors are frightened and they want to get into something to hold their purchasing power, rather than trying to, basically it's a sea change. Investors out there are going from trying to make yield, which is what they've been pushing for years, trying to make yield, to trying to preserve wealth. Right now, they've switched. They're just starting. It's just beginning. But this will grow. And you're going to see a few of them run in that way, and then the fear goes away. The fear is going to come and go at first. So we got a day of fear today. They're out there buying into things that they're going to preserve their wealth. And then what we'll have is, then they'll forget about the fear, and the market starts to go up a little bit again, because like I say, they're overcooking the market. They're doing too much. They're dropping it too much. It's going down too far considering what the Fed's done, which is not that much. Okay, so the market probably bounced back a little bit. The fear trade will go away, because these guys will say, hey, the sun's come out again. Look, the sky's not falling. And so it could reverse this fear trade. But it will come back as these markets start to turn lower and lower later, when the Fed does more, when they start to raise rates more than they've done already, when they get more 50 basis point rate hikes. Cumulative effect. It's an accumulative effect. Anyway, we're going to take a look now at the US dollar index, which is at 102.79. Listen, guys, this has been your show for today. I'm really thankful to all you guys who've joined up over there at Patreon. I'll put the link in the description again today. It's only $1, guys, and I'm going to tell you what, it helps support my channel. And I'm making it cheap so that lots of you guys can get on over there, and then you can watch my videos, which I'll be producing probably between 4 and 8 of them a month over there, which are going to be a mixed bag. I mean, some of them are going to be podcasts, a lot of them podcasts, and then sometimes I'm going to do just, I don't know, just whatever I feel like, subject matter I feel like talking about over there. It could be anything from soup to nuts, a wide range of topics, more so than on here. On here, it's more limited just to finance, Over there, it might be anything, and so also my podcasts over there, I try to make them 30, 40 minutes long, so for people who like to listen for a whole half an hour rather than just a 10-minute show, and maybe you're making your coffee or something and you want something that lasts a whole half an hour long with no commercial advertisements. So it's only $1. I mean, that means you can buy 4 years for $50. 4 years. It's a good deal, and I want to keep it a good deal for you guys. I don't want to be greedy and charge too much, and just make it easy, real simple. You don't even notice that you're paying for it because it's so cheap. Anyway, thank you guys for listening. Links in the description, and we'll catch you guys in the next show. And have a great afternoon. Bye-bye.